Officially, it's supposed not to be an answer to the Chinese Silk Road, the Chinese Belt and Road Initiative. But of course, the main motivation is effectively to try to answer to China's very ambitious spending spree on infrastructure all over the world. So it seeks to somewhat balance the effect of China's Belt and Road Initiative with a budget of over 300 billion euros, which is going to be spent over the next 5 years.
Where and how will it invest?
That's, of course, a very important question. Part of the fund is about leveraging European budgets. So you will have the European institutions, such as the European Commission, also the European Investment Bank, that will actually put a chunk of the money on the table. But then also it expects member states, banks and private investors to contribute their bit. So the EU is sort of contributing part of the funds, but everything is going to depend on the interest and the readiness of private investors and the 27 member states to actually make projects happen.
Yeah, and therein probably lies the risk, because a lot of the countries that they may be looking at, like Africa, even in the Pacific, where China has been very heavily investing, may not be seen as good commercial investments.
That's true indeed. And furthermore, also a lot of European companies are quite okay actually working with the Chinese Belt and Road Initiative. We had, for instance, in the last days, some statements of the corporate world and lobby groups here in Brussels actually stating that cooperation with China continues to be key. Also, of course, the conditions attached to the European loans are going to be quite of a different nature than what China offers. China offers loans without any kind of political requirement at this moment. And that also is quite lucrative to some of the European companies involved. And then I think the point that you make is a very important one. Some of the African countries that the European Union is looking at at this moment are just not very, very attractive for a lot of European investors. And I think therefore also they will continue to show quite a lot of reluctance.
Yeah, it is interesting that you point out that there are many European banks making a profit from the Silk Road Initiative. China has had very deep pockets. They've certainly made loans, but in many cases, these countries can't afford to pay the loans back. It's the politicians are then completely beholden to them. Has China learned anything from the way it's gone about this initiative and how compromised that it leaves other countries?
Absolutely so. China is actually rather rapidly learning and is now shifting from these big megalomaniac debt-driven projects to now more, for instance, public-private partnerships, reducing actually the risk of debt getting assets are not being repaid, and also involving local partners in developing countries. What you also see is that China is geographically spreading the risk more and also continues to invite governments to give guarantees that, for instance, they put deposits of mineral ores, energy, forest at disposal whenever loans cannot be paid back. So I think China is going to continue to be rather flexible and also provide its credit and loans in a more sophisticated way that also gives a little bit more guarantee to the Chinese lenders themselves that they will see the money back.
Yeah, Jonathan, though, doesn't China have just a huge head start on this, and doesn't it strategically really have quite a strong grip on many parts of the globe now in terms of its strategic interests?
Absolutely so. And it also remains a question to which extent developing countries will be interested in this European money. Chinese influence is already extremely large. And I think also one of the problems with the Global Gateway is that it somewhat ignores and sidesteps the geoeconomics at work. Essentially, what China's main advantage is besides having an 8-year headway, that also it keeps recycling, so to say, all the dollars and euros earned from trade with Western countries, the EU, the United States, into these strategic credit lines. So as long as we allow the Chinese to have this huge trade surplus with, in our case, the European Union, China is going to continue to have a financial war chest that is going to be way bigger to continue to compete with this global gateway. So I think we have to look at the problem with China at the fundamentals and essentially stop it from using the euros that it earns from trade with the EU for projects such as its own Belt and Road Initiative. As long as we are not doing that, I don't think that the global gateway is going to be very effective.
Yeah, so that might be a far more efficient way to look at trying to stop China's progress on that front. Great to talk, Jonathan. Thanks so much.
My pleasure.